Hello everyone, welcome back to our channel. And if you are new to this YouTube channel, I request that you subscribe and also hit the notification bell icon so that you can stay connected and notified whenever we upload new videos. And if you are a returning subscriber, I really appreciate your effort for trusting our work and for continuing to support us here at CPA Cafe Charles Accounting Tutorials. We are dedicated to provide you with everything about accounting and finance, accounting and finance. So thank you so much for your support. Now let's dive in and get started. We are going to look at financial management, and this is going to be our lesson 1. It's going to be our lecture number 1. So this is financial management. It's financial management paper, and this is our lecture number 1. And my name is Charles Cafe, and I will be the one taking you through this course until the end, including even the revision lectures. Here, you will need to have some idea or some understanding of quantitative techniques. And this is a paper that we do at CPA level 1 and even financial accounting. So we shall be having these disciplines: financial accounting and even some business law. And I'm very sure by this time you must have done these at your level 1. And the reason as why you should have those is because we are going to look at things that are going to be related to some of the things that we do from those different courses. Because there are things such that when I say this is a financial report or a financial statement, then you'll be able to understand what I'm talking about. However, the journey of financial management starts here on level 2. This is where we are starting our journey of financial management. So for CPA course, the journey for financial management, it starts on level 2. And then we shall conclude it with advanced financial management. That is when you reach level 3. And I will be the same person taking you through the same advanced financial management when you reach there. So without wasting more time, let's now look at the paper structure. Paper structure. The paper structure of financial management, FM. Now, financial management paper is made up of 2 sections. That is section A and section B. Section A is 40 marks. It's marked out of 40. And there we have only one question. We have our question 1. And then section B, for section B is made up of 4 questions. 4 questions from which we are supposed to attempt only 3. So we attempt 3 questions from section B. And each question takes 20 marks. And of course, I repeat this same breakdown of the paper structure when we reach to our revision, so that we can be able to explain more on the question approach. But right now, I just want you to understand what we have in these different sections. Meaning the section B is going to be marked out of 60. So when you get the section B and section A is 40 marks, that makes it 100%. So that's the paper structure. Now, let me just give you a brief idea on question approach, because this is very important. And let me give you the question approach so that by the time we go to doing some numbers, you actually know what you are looking for. So we are getting these basic principles from the start. Now, one thing that I want to let you know is that we have a Telegram channel. We have a Telegram channel, and the link for you to join the Telegram channel is on this same YouTube channel. So the link is within the About section of the YouTube channel. The About section of our YouTube channel. That's where you are going to get the link that will connect you to our Telegram channel. Now, that Telegram channel or group, what is the use or what's the reason behind that Telegram channel? We created that channel specifically for you to join and also receive documents, receive the recent communications, receive all the necessary documents, notice, and other information that are in relation to accounting and finance. So anything to do with accounting and finance, anything that you need as a profession in that docket, you'll find it in that Telegram channel. Meaning we are not only sharing things to do with the CPA, there are things to do with the SCCA materials, there are things to do with CIMA materials, there are things to do with the CFA, there are things to do with the FMVA, there are things to do with BIDA, there are things to do with accounting. There are so many things that you are going to find in that Telegram channel. And it's the same channel that we use to submit the past papers and the different marking guides. So the reason that's why we connected that link there is because we want you to join and be able to download these course materials, the past papers, and the class notes. So that's one thing that I wanted to emphasize straight out from the beginning. So we shall have the course materials and other things that are related to accounting and finance. Although you may also get some assistance using our WhatsApp number. It's +256 775 771 676. That's our WhatsApp number. That's my WhatsApp number. So we also provide assistance from there, but most of the things that we need to download, they are within our Telegram channel. And the link is in the About section of the YouTube channel. So that's what I wanted to clarify. So let's look at the question approach, because this is very important. If I'm to start answering questions, what should I start with? That's what we are going to look at for now. Now, I'll give you the options that you may be having as a student, but I'll also give you my preferred approach. So I prefer to assume that for every section B, let me start with section B. Section B, question. In other words, those questions, section B, each student should take only 36 minutes. So for every question in section B, for each question, for each question, a student must spend a maximum of 36 minutes. Because there are going to be three questions that we are going to choose from section B. And that is very important. So we need to be disciplined on time management. So if you don't respect that, then you may have challenges. And for section A, because this section A is compulsory, only one number, and it is compulsory, and you have to attempt it. So we must spend a maximum of 72 minutes on that question 1. Whether you like it or not, that's as per time management. So what we are trying to do here, we are trying to manage the time, because most students fail not because they don't know, but it is all about time. If you don't time yourself, you will not get it, because you can spend 2 hours on question 1 and you actually don't finish it. But for you doing only section A will not make you pass, because section A is marked out of 40 and you can't get it. You may not get it 100% right. So that's why we have to put in the aspect of time management. So the reason as why we are deciding that way is because the FM paper has 3 hours and 15 minutes, where you are told that you should spend the 15 minutes, you should spend the 15 minutes reading through the question. And we need to have a note on those 15 minutes. Let's make sure that we don't spend the 15 minutes reading through question 1 because we can't finish it. The 15 minutes, we shouldn't spend them on question 1. If they tell you have used the 15 minutes to read through the question, then you should not focus on section A. This one should be only on section B. The only thing that you can read about section A, you can only read what is required. From section A, just see what do they want us to do. You just look at the required, and that's it. After reading the required, just rush to section B. So within the 15 minutes, you should only read the required, because after all, even if you don't read the section A, even if you read it, it is a must, you have to do it. So whether you like it or not, you will have to do it, and you will be forced to read it in the end. So, but we said that we should spend the 15 minutes reading through section B and only reading the required from section A. What are they interested in? And that's it. And for section B, because there are 4 questions, then you are going to make sure, because there are 4 questions and we are selecting 3 questions. These are the ones that we are supposed to select only. Then it is important for you to read through those 4 questions that have been provided to you, and only select those 3 questions that you are going to do. Therefore, at least in the 15 minutes, you must be able to choose which questions you are going to attempt. So from the 4 questions, you must select the 3 questions you are going to do. But you should always choose the most doable numbers, the most doable questions. By choosing the most doable, the interpretation for most doable is that you can maximize points. In other words, where you can get maximum marks. In other words, choose those questions where you can get at least 15 and above. Why are you going to make yourself stranded by selecting a question where you only know you can get 5 marks correct? The rest you will just be gambling. If the question is hard, it is very possible that the paper is very hard and you can't be sure of what you want. At least select the 3 that you can try. Within those 3, if you have 2 and you are very sure maybe you can get 15 and above, the 2 numbers you can get 15 and above, then that will be okay, because we can't make ourselves comfortable that we are going to pass number 1 and we get 40 out of 40. So if you have made the selection, now what is next? What is next here is how are you going to start answering the questions? Because that's also important. How do we start to answer the questions? So how are we going to start answering those questions? This is very, very important. You can forget everything, but don't forget this step, because it is the one that is going to make you time yourself well, or it will make you fail. So we have agreed that section A we are going to spend. We say that section A we are spending only 72 minutes. Remember, this one is 40 marks. And in section B, because we say that in section B we have section B, we have 3 questions, and each question we are supposed to spend 36 minutes. So it means in the section B we shall spend 108 minutes. These are the minutes that we are supposed to spend in section B. So this is now the issue on how do we start answering the questions, or how we should start answering. Let me give you options. A student may decide that I'm going to start. There are 2 options. You can choose to start with section A. For section A, I'm going to call it A. And then for section B, I will call it B. So you can decide to start with section A, and then you end up with section B. Remember, section B has 3 questions, so there are going to be 3 Bs. Now, the other aspect is that you can start with section B. Those are going to be 3 questions. And then you end with the section A, because section A has only one number. But since section B has many questions, because we are seeing section B has many questions, there are 3. So since section B has many questions, I prefer that you start with 2 questions from section B. I repeat, I prefer that you start with 2 questions from section B. The 2 questions from section B, they are going to be B. So those are 2 questions from section B. Now, since we have, now when you look at the time, we are using 36 times 2. So meaning we are taking 2 questions from this. The time that the full time that we have is 108. So meaning we've spent 72 minutes on these 2. So the issue is when you have spent the 72 minutes, but remember you have section A which will take you more 72 minutes. What you do, you come here and do section A. So when you do 2 questions from section B, you do section A. Now you will be left with 1 question in section B. So when you are done with the section A, you can come and write the section B number. So my preferred approach is for you to start with 2 questions from section B, then you do section A, and then you finish with the section B. And why do I choose that? Because if you start with the section B, 2 numbers, then section A, and then B, section B. The gist of the matter is here. You must start with section B, you must start with those numbers that you can maximize. Maybe you can get 15 marks each. You can get 15 marks from each. So if you can get 15, that will mean that that is 30. Remember now, the challenge is we are going to spend a lot of time on section A, because it needs you to read the scenario and you interpret it. So most of the students, they don't actually spend the 72 minutes. They spend more than this. So since we are going to spend more time on section A, this section A, even if you just get 25 out of 40, it is okay. 25 out of 20 is because you are going to spend, let's say we've spent more than the 72 hours. And maybe instead, the other question that we are left with, it's supposed to be for 36 minutes. And we'll find ourselves spending only 25 minutes. Maybe we are only adding there 25 minutes. So within these 25 minutes, even if you just get 8 out of 20, it is okay. When you sum up the 30 plus the 25 plus the 8, you've already passed. You find yourself you have already passed, because this is going to be 55, then this one is going to be 63%, and you've passed. But the issue was for you to manage time well, because here you surrendered over 11 and you added to this one. You surrendered over 11 minutes and you added to this one. So it becomes 83 minutes. Because the reason why we end with the section B is because this question, maybe it wasn't very easy for us. Otherwise, if it was easy, we would say we are going to do BBA if it was easy. But it is very hard for you to find all these section B numbers are going to be very easy and you can maximize them 15, 15. It will be a little bit hard because they are going to be involving some calculations. So it is always better to go with the same idea, BBA, B. Even if the numbers are very easy, all of them are very easy for you to do, go with this format. Because if you use this BBA, by the time you reach to section A, you are already frustrated, you are tired. You've spent a lot of time on these ones. You are already tired. You can't even read the scenario. That's why we prefer you first do the two numbers and then you start section A when you are not all that old, when you are not all that tired. By the time you go to this last number, even if it is very easy, you will be tired. So when you are tired, you'll find yourself not maximizing it, but at least you have maximized this first one. So that's the reason, that's my preferred approach on how you can be able to answer those questions. So the key things to take out from this before we look at the requirements, because we need to look at the requirements that we need for FM paper. So the key takeaways here is we shouldn't use the 15 minutes to read section A number. We should read only the required from section A. Then we concentrate on those 15 minutes and we finalize them with selecting the questions that we are going to attempt. So that's what I wanted you to have from that point. So we need now to look at the requirements. What do we need to have? You are supposed to have a study material, and we said you may be having a book, you may be having a workbook, anything, a pamphlet, a handout, so it can be anything. But we said from the start of this lecture that you can download those notes from our Telegram channel. So those ones are sorted. You need to have at least a study material. These study materials, they may include past papers, because these are very, very important. Past papers. So The reason as why I prefer to make some of these notes, because even when you have these study materials, make sure you make notes for your own, because your own handwriting, your own notes that you've made from the summaries of the lectures that you had is very important than carrying a 500 textbook that is going to make you look like you are going to just be there reading all the time. So it is more for you to listen to the lectures, make the notes for yourself, then you use the other one as just additional materials for you to make research to, or to get some deeper explanation of certain things. So we said you can download the study materials, the past papers, and the solutions from our Telegram channel, and the link is on the same channel. But the other second thing I want you to get is a training plan, or what we call the course outline. There is a course outline for CPA financial management paper, but I also have my training plan that we are going to be following whenever we are taking these lectures, and it's also going to be in the same Telegram channel. So the training plan is like the course outline or the schedule that we are going to be following. So on my training plan, I also created a link, because I make sure that every topic we do, we link it to the exam past papers, so that when you check the schedule, you can know where some of those questions, or which questions can they set from the things that we've covered. So I make sure I highlight the courses. I highlight the outline, then we look at some of the questions. So when you look at the training plan, make sure you follow up those questions to see what they actually set there. So the second thing is you need to have a scientific calculator, and you don't actually need to just have it, but you have also to understand how to use it. So it is very important. So you should have a calculator, and even the exam syllabus. Of course, the exam syllabus, even if you just use the training material, because I developed the training material from the exam syllabus as it was revised in 2023. So just know that the training plan was designed out of the exam syllabus. So the third thing that we need to have, we need to make sure that we revise the theory almost every day. Even if you just give it 15 minutes, it is okay for the theory, because we need to have the theory. But there is also a website where you may get some more. It's called Investopedia. This is a website for financial managers. So you can go there in case we have, maybe I've highlighted something and it is different to what you knew, then you can check it out, check that website, and be able to have something that can enlighten your understanding or change on what you've been knowing. But otherwise, you don't need to make any research. The training plan that I developed is actually catering for it. Now, this is our training plan, or what we call a training schedule. It was developed from the examination syllabus, and it has, or I linked it to questions that have been set from the different topics that we may look at. So That's how we are going to be moving. So we have the topics, we have even the questions that are within that. So you don't need to make any research about anything because we are going to be having everything. Remember I said that there is a website for finance managers and I called it Investopedia. So if there is anything that maybe the way I've internalized it is different from how maybe you learned it somewhere, you can actually be able to research there and we'll be able to reconcile on the things that we've discussed. But if it's not that way, then we may not have any issue. But what I'm only requesting is that you follow the guideline. You'll be able to join the Telegram channel, download the course materials, download the past papers, and have everything in place. So you don't need to get any pamphlet or make some research on your own. Just know for financial management, I've researched everything that you need to know as far as the CPA paper is concerned. So that's how I can describe, or that's what you need to understand as far as introduction to financial management is concerned. So let's dive in and get started with learning. So here we have some kind of homework as we are starting to go through our learning. So we are kickstarting our learning, but here we have something like homework. And it will be upon this homework that will guide us on the things that we are going to cover today. For this homework, by the end of this lecture, we should be able to at least answer some of the questions that we have. So without wasting more time, let's look at, there are two numbers. We are going to have two numbers, but these are basically on memo and report. A memo and a report. So the homework is going to be on those two aspects. And that's how I want us to start for our lecture. So let's first present the homework. So we can expect that if you are done with your homework, you can actually share to this WhatsApp number, +256 775 771 676. And the reason why I kickstart with something like homework, it is going to give us a target of certain things that we are going to handle. So this is a WhatsApp number where we are going to be able to submit all our homework. So this is homework, and we are supposed to present your work after say 2 weeks. Let's just give it 2 weeks. So we have two questions. There are two questions and they are requiring us to do either a memo or a report. So, by helping us to understand that, in other words, if you do the work, you'll be able to understand, and I'll come back and I make some guidelines. But we are going to look at how do we prepare a memo and how do we prepare a report. The reason as to why I'm starting with these items is because the examiner is going to be looking at you as a finance manager. So finance managers, they are supposed to be submitting reports. So we are going to look at, that's where I wanted us to start from. So let's first look at the questions. Hope you've gotten the WhatsApp number. So question one, it says you are required to write a memo to the managing director of KC Group explaining the functions of finance manager, finance controller, treasurer, then the treasury, and the role of a treasurer in a multinational company. Then we also provide the merits of a centralized and decentralized treasury function. So that's our question one. You are required to write a memo to the managing director of KC Group explaining the functions of finance manager, finance controller, treasurer, the treasury, and the laws of a treasurer in a multinational company. Merits of centralized and decentralized treasury function or department. So that's our question one. So let's look at question two. Question two, it's a scenario-based number. In a company, an agency problem may arise between management and shareholders on the one hand, and debt holders, in bracket we have the creditors and lenders on the other hand, because management and shareholders who own and control the company have an incentive to enter transactions that may transfer wealth from debt holders. So in a company, an urgency problem may arise between management and shareholders on the other hand, and debt holders, those are creditors and lenders on the other hand, because management and shareholders who own and control the company have an incentive to enter transaction that may transfer wealth from debt holders in lending contracts. So the company is now called KC. Let me just call it K2 Limited, a company operating in central Uganda, has hired you as a financial advisor to the managing director. And the managing director has requested you to write a report and address the above issues as follows. So these are going to be now our questions. Part A, you are going to highlight the various measures that would minimize agency problems between owners and management. Part B, you are going to define agency relationship from the context of a public limited company, and briefly explain how this arises. Then we look at part C. Part C will be saying state and explain any 4 actions or transactions by management and shareholders that could be harmful to the interests of debt holders. In other words, these are the sources of conflicts. So we look at part D. Part D will be saying, briefly explain any 4 restrictive covenants that debt holders may use to protect their wealth from management and shareholders. Then part E, we shall explain the 3 forms of business formation. Explain their merits and challenges or demerits. So that's the end of our homework. So the reason as why I started with this work, we can see this homework, the whole of it. So that's our homework, and it's all about a report and a memo. So that's where I've started, and that's how I wanted to start this lecture, by giving you homework that we can finish in 2 weeks. The reason as why I gave you that homework is because whatever we've highlighted in that homework, we are going to have it. Now, by looking at those 2 numbers that we've just given as our homework, it means in the homework that we've got, we shall be able to understand some of those things. If at all you try to to do it on your own. In the homework number 1, they wanted us to write a memo. And homework number 2, they wanted us to write a report. And the reason as why I started with it is because the examiner will also expect you to know how to write both the report and the memo. And that's where I want also to start our learning lecture. And whatever we see, or whatever we will see in these questions, these above 2 questions that we have just highlighted, will be handled 100%. So just stay connected and we shall have everything done. So the memo, we are looking at memo and the report. The question is, how do we do our memo? So my first lecture is going to start from knowing the difference between a memo and a report, because most of the times the examiner is going to be asking you to present your work in either a memo or a report format, especially under the advanced financial management, because here they are going to ask it, but not too often as it is in the advanced financial management. And that's why we need to understand these things from the very start. So that's why we need to differentiate to get the difference between the memo and the report. And the only way we can be able to do that is by looking at their formats. What is the format of a memo? In other words, what's the template? We are going to be looking at the template on report or memo writing or presentation. So these two things, they are very important. As I said, we need to look at the difference between a report and a memo. And we are going to use a template to get the difference of what these two items look like. So here I'm going to illustrate the template on how we do these two aspects so that we can see the differences. So we are going to follow the question. We are going to borrow some words from the question, these two questions that we have highlighted. But if not the case, then we can provide a small, just a brief question. We are going to use this scenario here. As a finance advisor to the MD or to the managing director of, let me call it KC Group, prepare a report or a memo on the effects of, say, let's just go with COVID-19, because that thing disturbed people, disturbed all of us, to the financial performance. Financial performance of a company. So we are going to basically look at the effects of COVID-19 to the financial performance of KC Group. So we know the effects. We all know what COVID-19 is. That one we don't even need to explain. But as we are writing, if it is the question, then you have to put you have to put something in context to actually explain what COVID-19 is. Then we have to look at what was the impact of COVID-19 on the financial performances of the company. So it is actually a very good question that we can look at. So we are going now to be looking at the formats, but bearing in mind that the question we are looking for is, we are preparing, you can't prepare both. In an exam, you are supposed to either prepare a report or you prepare a memo. You should get that from the beginning. So now, there is a simple assignment which we've just written here. As a finance advisor to the managing director of KC Group, prepare a memo and you prepare a memo or a report. And as I said, you can't prepare both in an examination. But since I'm going to be teaching it for the first time, then we will need to see how these two actually look like. So we shall prepare both here because we are learning. And the topic that we have is the effects of, or the effect of COVID-19 to the financial performance of the company. So the effects of COVID-19, you know them. But what I'm only interested in is, how do we write a memo or a report? So these are the things that we are going to basically focus on. So let's look at how we can start by looking at, maybe we start with looking at a report. So we wanted to start with a report. So when writing a report, we always start with a title. The first thing that we have to deal with is what we call the title. So we don't need to forget the title. So for a report, we always start with the title. And we don't need to write the word title. What we just need to do, we just need to start the effects of COVID-19 to the financial performance of KC Group or ABC Limited. And that's going to be our title. And that will be followed. So from there, we are going to indicate, or it's going to be followed with who we are writing to. So we shall put to, and then semicolon. So we indicate that this report is going to any other person that we have in the question. So the question was going to the managing director of, let's say, ABC Limited, KC Group, or whichever company they have given you in the question. So this was going to be the second idea. So the next thing that we have to do is to make sure that we show where it is coming from. So who is writing? From who? Now maybe from maybe our finance advisor. It's the examiner will tell you, will guide you on who you are in an exam. You will see in the scenario that is giving you the title that you are supposed to call yourself. But most of the times we are referred to as finance managers. So the examiner may not necessarily tell you that you as ABCD, but you will see in a course in the case, and you'll be able to know who you are writing to, or who is actually writing, and you're writing to which person. And in this case, we had ourselves as a finance manager. You can be anything. So whatever the examiner has called you, you can take it. But the other thing is, what we need to note from this is that even when the examiner has not told you, don't ever put your name, that Charles Kafel. No. Don't ever put your name. If the examiner hasn't given you what you are, you can say as a financial consultant or as a consultant. It is from the consultant or the financial advisor. So the main thing here is to locate where it is coming from and then where it's going to. So the other thing is the date. Now for the date, we are supposed to be careful with the date, because we are supposed to use the exam date. In other words, it's always that day when you are sitting the paper. So in the exam, don't just put it, instead of putting the real date, or you've sat maybe the paper on 20th, let's say June, and for you just put exam date. No, you're supposed to put the real day when you've sat for the exam. And I hope that's okay. So from here, now we give a brief introduction. You can just come and you put the introduction here. Introduction, then you start giving your brief introduction. And in this case, you will talk about COVID-19. So those are the things that you will give as a brief introduction. So from that point, then you start looking at if there were parts, maybe part A, part B, part C, you also respond to each in a different paragraph. So you are going to be responding to the different parts, and each part should be on a fresh paragraph, unless there are no parts. If there are no parts, you can put everything in just one paragraph. But what is important is the format. Finally, when you have done talking about the issues that you are supposed to talk about, then you can come and say, you give your conclusion. And the conclusion should actually be simple, even if it is just one line or two. Then the other thing, because you may be having some workings, maybe you've done some calculations and other things. Maybe they were asking about ratios and you've done some calculations. You put appendices or the appendix at working 1, working 2, but what is most important is that you are not supposed to sign. If you sign a report, it's like you have disqualified it. So you are not supposed to sign off. a report. So at all times, never sign a report. So let's now look at a memo. For the memo, we don't have a title. Most of the times when you're writing, you just find yourself, if this is the page, you just come and put the word memo in the middle. You can even highlight it, you underline it, then you start to, so you start straight out where it's going. So normally we don't have a title since it is mainly an internal document. So you start straight away to show who you are writing to. And in this case, they told us was the managing director. And then the next thing is to show where it is coming from. So it is coming from the financial advisor. Now from there, we have to put the date. But as I said, the date is always the exam date. It is always the exam date. So that same day when you are sitting for the paper, that's what you put. Then we are supposed to put a subject. Here you can also call it dear sir or madam. Then you put subject. Like the same way you write letters, you can put subject. So when you put this subject, most of the times it's supposed to be slanting in this format, that all these words are supposed to be starting here. And the next thing, you give an introduction, a brief introduction about COVID-19. Then we do the rest, because the rest are going to be the same as for the memo, sorry, for the report. And that's all that we wanted to show as the difference between a memo and a report. You've seen here we don't have a title, here we have a title. So now, however, the examiner doesn't care if you write either a memo or a report. This is very important for examination purposes. For examination purposes, if the examiner says write a report and for you write a memo format, it is okay. That is strictly for examination purposes. Don't say you are writing, someone has told you to write a report and you write a memo and you think it will be okay. This is for study purposes as per the examiner. So, because how we are going to be focusing on strictly writing reports, that's going to be in paper 18, that is integration of knowledge. Because there you'll have to read the cases that have been given to you, maybe in 15 to 20 pages. They have given you a case, then you read through the case, then the next shift you come and attend to the report. So that's where we shall be able to learn how we can write reports in the right way. But for now, that's what we can do. This is very important, and the reason as why I started with it is because most of the times they are going to ask in that order. Because if they say prepare, if the question is about ratios and they want you to show in a report format and you don't provide a format for the report, it means you are going to lose some marks. So this is how I wanted to start the lecture. And because I've already guided you on what we need to have, then we can now go straight into the real issues that we wanted to talk about as far as financial management is concerned. This was just something you needed to understand right from the start. So that's how I wanted to start this lecture, and I've already guided you on what we need to do. But now, when we are doing financial management, whenever we are attending on financial management, I'm going to be looking at you as a finance manager. And that's how even the examiner will be looking at you. So when they are asking you to advise on something, then they will call you a finance manager. That's how the examiner is going to be looking at you. So when you're a finance manager, you are expected to make decisions. So as a finance manager, you are expected to make decisions. And one of the decisions, you are supposed to do what we call investment decisions. And that's the role of a finance manager. For example, sometime back we saw the government during COVID-19, where they wanted to convert all the resources to constructing roads, those that we are going to Congo and so on. But the MPs were saying, no, let's buy food for people. So even you in your organization, you are supposed to make decisions. And those decisions you are going to make, you are going to guide your CEO or other managers. And the aim of making those decisions is to increase the wealth of the shareholders. Because it is the businesses for those shareholders, they are the ones who put in their capital. So the moment we make these decisions is we want to increase the wealth of the shareholders. The other decision you need to know, but you have to note something. When the examiner asks you for the roles of a finance manager, one of them is to make investment decisions, as we've looked at. Now, the other is you are supposed to make finance decisions. Because if you say that we are going to construct, let's say we are going to construct a factory, we are going maybe to buy machines, and maybe it requires, let's assume it requires 800 million. Maybe you wanted to construct a factory, but it will cost us 100 million. Then the question is, where is that money going to come from? So you as a finance manager, you will identify the possible sources of funding for the factory investment that you are proposing. So for example, we saw sometime back what M10 did, and even of recent, even Airtel did the same thing by floating their shares to the public In other words, instead of borrowing money from banks and other institutions, they went in for shares. They went in to borrow from the public. Therefore, as a finance manager, you will have to make decisions whether you are going to go for shares or you are going to go for a loan. And in this paper, a loan is more of a bond. So it is either going to be loan, we call them bonds, or debentures, not these small loans that we get, or we go for shares. Now for shares, we go to the public, but it is only for those listed companies or the public limited companies. Because now, the reason as why when we talk about these loans, we are meaning bonds and debentures is because we are looking at bigger companies. We are not looking at these small loans, because when you are talking about corporations or companies, we are talking about corporations like MTN, corporations like Stanbic Bank, corporations like Standard Chartered, are not these small startup companies. So when we are talking about corporations, we mean these big institutions, and they are the ones that we are going to be focusing on. So as a finance manager, you take more decisions, and ideally for these decisions, actually for now the order doesn't matter, but as we go on and on, when you are learning some of these things, you realize that actually the order matters, and you'll be able to arrange these decisions and to put them in the right order. Now, the finance manager makes 4 decisions. There are mainly 4 decisions. There are 4 decisions that the finance manager makes. We've seen 2. We have discussed 1, investment decision, and the second one, we've looked at the finance decision. The third one is what we call the working capital. Working capital management. It's also a role of a finance manager. Now, working capital decisions are short term, whereas the investment decisions are long term. For example, if you are going maybe to invest in, let's say, a butchery, it's a long-term project. And if you are going to buy, maybe let's say you are going to buy trucks that will help you or that will be used in transporting your meat, then it's a long term, because that truck is going to be there for years. And I hope that makes sense. We need to understand that the short-term decisions, working capital decisions, are always short-term. So if you are going to buy the truck to transport your meat, if you have finally started your butchery, so since it is long-term, we will have concerns, because money will be there for a long period of time. But now you will need working capital to keep the business moving. In other words, you'll be required to pay certain things that are going to be short-term in nature to keep the business operating as you wait to harvest profits from the long run or the long-term investments that you made. and therefore working capital decisions needs to be done and understood. And later we shall learn about working capital decisions. So now that's the third one. The fourth one, now that is the third decision, working capital decisions. But we shall learn more about it, because under the working capital decisions, this is where we shall look at things to do with management of receivables. And that's why I told you that you need to have some knowledge of financial accounting, because the receivables are appearing in the balance sheet, and they are the ones that we call debtors, the people we've sold goods on credit. So therefore, if we are going to sell our meat on credit, then we should learn how to manage our receivables. Otherwise, if they are not paying us, we shall lack cash in the business. Secondly, how are we going to be managing our cash if we have those that are buying on credit, and we need to know how to manage them so that they can bring in cash? So when they bring in cash, plus those that bought on cash basis, how are we managing our cash in the business? Whether we are going to keep our cash or we are going to invest our cash. Then the other thing, or the third aspect under working capital, what of the inventory? Because we need raw materials. Even when you are starting your butchery, the animals you are slaughtering, they are your direct raw materials. So how are we going to manage our payables or creditors, those, especially those who give us those raw materials on credit? Therefore, those are the working capital decisions that you as a finance manager, you are supposed to make and take care of. So now the last bit of the decision is what we call the dividend decision. This is the last decision that the finance manager do. Now, at last, when the company makes some money or they have made some profits, then you as a finance manager, you need to make some dividend decisions. And those are basically the 4 decisions a finance manager must know and make decisions on. Therefore, when I ask you a question, what are the roles of a finance manager? Whereas when you read through the notes, there are others, but these 4, they should never miss. So you can look at the notes and you add in some more, but these 4, they should never miss. But now there is some highlight I need to make on the dividend decision. Although dividend decision is something smaller, or it is a smaller topic in this level for financial management, on level 2 it is very small. We just need to know the theoretical things. But it is a very bigger topic in advanced financial management, that is on level 3. And on this level, the examiner only expects you to understand the following scenarios. These are the scenarios that we need to understand. One, we need to understand whether you'll pay dividends or not. And it's all about the finance manager to advise the board on whether to pay dividends or not. But at sometimes there are concerns. There are concerns of what we call the M&M. These are Modiglian and Miller. There are concerns of Modiglian and Miller. Or the traditional school of thought. So, you will see those ideas or those aspects as we reach to those topics. Remember, this is going to be like one of those last topics that we will cover, and it is very small here on level 2. So here it will just take like 30 minutes and it will be done. So we shall see those concerns, the M&M, then the traditional school of thoughts. Traditional school. These we shall elaborate them under level when we go to level 3. So at times, under dividend decisions, the finance manager need to decide how much to pay. These are the key issues. He has to decide whether to pay dividend or not. Then he has also decisions to decide how much to pay in dividends, or to pay or declare. Because once declared, it's like as if it has been paid. Because once declared, it will be paid, however much the company may delay. For example, if you had made, let's say, a net profit after tax of, say, 2.5 billion, then are you going to pay all of that net profit after tax in dividends? And if yes, then you are going to have problems of cash in order for you to invest. Because if you are going to pay everything that you've earned in the profit because you just want to make your investors happy or the shareholders happy, remember you have to make some investment and you need cash. Remember, you as a finance manager, you have to keep investing. You keep investing and investing in order for the company to make more profits in the future. So if you are going to give out all the money in dividends, then you will have challenges under the financing decision, because you will have to go and borrow. You borrow money, yet the dividends were free with you. So that means as a finance manager, you have to think, and it's not that it is by law that you are supposed, or it is a must that you are supposed to pay all the money in dividends. And that's why these school of thoughts and the Modiglian and Miller, they have their arguments. We shall look at those arguments of whether we should pay or we shouldn't pay dividends. So it is not mandatory that you are supposed to pay everything that you've earned. So it is the finance manager's decision together with the management team in a company. So I hope that makes a little bit sense. So the last thing that you need to take note of, you have to decide whether you are going to pay dividend by cash, to pay cash, or you are going to issue shares. They may be issue shares. They may be bonus shares, whatever it could be. Because you may decide that instead of me paying the money that I have, let me keep the money that I invest in to make more money. But instead, I increase the shareholding of these shareholders rather than paying actual cash. So we shall look at some of those different payments, but those are going to be theoretically. But when we go to level 2, level 3, we shall do some computations. So you may issue what we call bonus shares or bonus issues. And that's the whole concern of decision, the dividend decision at this level. That's the concern. We are just looking at these 3 parameters, whether to pay or not, or how much to pay. Then are we going to pay by cash or by issuing more shares? That's all that we need to understand as far as dividend decision is concerned. So let's now look at the laws of finance. In other words, we are going to look at the laws of finance or finance function in an organization. This one, we are looking at the department, the whole department. What are the functions? Because the functions of the department are almost the same as the functions for the finance manager. But how are you going to state them? That's what is going to make a difference. But otherwise, they are the same answers. We are just going to play around with how we present them. Now, I have already given you the homework on the role of finance manager or finance function. And I can outline for you some 5 points here. But for you to do the work, don't present them in outlines or in an outline format, because you have to make explanations. You have to explain them. Maybe let me try to explain some points, and that will give you a starting point. One of the roles of a finance manager is sourcing of funds. Now, the finance manager is responsible for fundraising on behalf of the company, where he has to identify the sources that are cheaper to the company in terms of finance costs, and eventually that will help the company to make more money. So that's how a finance manager is responsible for sourcing of finance. Then the second thing is he has to make investment of funds. You don't just bring the funds and you just keep them there. You pile the cash to the company accounts. You have to make investments. You have to assess projects, evaluate projects, and make investments. You invest the money so that you make more money. The other one is working capital management and treasury management. The other one, we may look at management of surplus earnings. And this may be whether they pay dividends or they invest back the money or they buy back some shares. So there are so many issues. So what we discussed in the previous slides were the general roles for the finance department in an organization. But what we have now, we are looking at the laws of finance manager, specifically as a person in an organization. They are the same laws, but the way you present them. Just know there is a difference between the laws of a finance department and the laws of a finance manager as a person. And if you are cramming that the examiner will bring this and just bring in answers, that's when the examiner will actually get you. Because you will give just one answer or two and you bias the examiner. And you find that the examiner is going to cross you out, crosses your work, because you don't actually know what you're responding to. The whole of these points here, these points you are seeing here, they are the very points that we gave under the finance function as a department. Because this was financing decision. This is investment decision. This is working capital management. And this is, of course, when you are dealing with the surplus, it is all about dividend. So the way you give these answers is actually either going to bias the examiner or you are going to get the attention of the examiner. Remember, the corporation or an organization we are looking at, we are looking for those big companies. Now, let's maybe try to get some picture of the organization that we are looking at. Maybe we'll try to take up the organization. Let's try to look. We are not going to study the organization structure, but let's just have a look, a small look. Organization structure. But the organization structure here, we are only bringing out the finance function. Finance as a function. Finance alone. So we are just bringing out the finance function. We want to see how is finance going to be arranged in an organization. Now, the corporation or an organization we are looking at, if you are trying to look at the organization structure may be different for different companies. Because, and it keeps on changing. These organizational structures, they keep on changing with the time. There are some positions that are going to be phased out. Because in the past, we used to have a person called a chief accountant. We used to have a chief accountant as number one person. We used to have that person. But for now, we have got what we call the finance manager. And this finance manager I'm talking about could be the CFO. This person could be the director of finance. Whichever case it may be, depending on the organization that we are talking about. So it could be anything. It could be the head of finance. So when we go up to top companies, if you try to look at top companies, like maybe we can look at companies like MTN, Standard Chartered, Bank. Stanbic, and others. So these positions they are actually there. When you go, maybe you go to their head office, you find those positions there. The finance manager, the CFO, or the director of finance, depending on whichever title they call that person. You may find is the chief finance officer, the CFO, or is the head of department. So you may find when they are calling is the head of finance. So therefore, you may have the head of finance, but below the head of finance, there is what we call, maybe they are those that we are calling maybe you may find when there is the treasurer, you may find the treasurer below the head of finance. You'll find people like the financial accountant, the financial accountant or the financial controller. Some of them, they call them financial controller. You know, some of the things they are phased out. Find them, they are calling them financial controllers. Because we don't want to talk about the financial accounting, yet we are studying financial management. So we bring in the other aspect of the financial terms. Financial accountant, they may call it financial controller. So we may have some other people. You may also find that even the finance manager himself is below. Now, you may find that above the head of department, head of finance, we have these other people. Maybe we can try to draw to make some illustration. Let's make some illustration on how some of these can be. That's how we can be able to explain it very well. So here, you may be having the CFO. We call that one the CFO, maybe the head of finance. So now, below this person, there are going to be people. We are going to have, you may find that we have the treasurer. We just use the different pen, different color. We may have the treasurer. The other person, we may say that we have like 3 people. Here we may be having what we call the finance or financial controller. And lastly, we have the finance manager. So we have the finance manager there. Now, this paper is looking at us as we, the finance manager. So you find that all these people, they are on the same line, but they are all reporting to this person up here, the head of finance. But all they are within the finance function. So for those companies, maybe you may find that maybe you are working with the Stanbic. You may find that you are working with Stanbic, but you are working up-country branches, Stanbic branches. There you may not actually see anyone, any of these guys. You may not see any. Maybe you're working with MTN, but you're working with those up-country branches. You will not actually see these people. So these positions, they will not be there. But if you trace your organization up to the headquarters, these positions, they are actually there. So if you look at Total, you look at weights, you trace. If you're working at let's say any petrol station, you will not actually see these guys. these positions will not be there. But if you trace Total to their head office, you'll actually be able to see these positions. They are there. So here for us, we are calling ourselves the finance manager. Now, when you go to level 3, the examiner there will be calling you the CFO or the head of department, head of finance. But you find these people, they may be bringing some information to this guy, the finance manager. Then it is this person to actually report. Or they may be, all of them, they are just reporting. So depending on how they do it. But we are looking at ourselves as the finance manager. Because the financial controller, we shall look at the laws, because we need to understand the laws of a treasurer, the laws of finance controller, then the laws of finance manager. They are all having different roles. This one is forming something different. Even this one is performing something else. Even us, the finance managers, we are actually performing different things. The things that we are performing, they are the ones we are discussing here. Sourcing finance, investing the finance. So these are the same issues. So when you look at the homework I gave you, we have to get the laws of a treasurer, the laws of finance control, and the laws of finance manager as persons, even as departments. But the one for financial control, that one we shall not talk about it, because we are not studying financial accounting. You know what a financial accountant does. So the finance controller is the one they used to call the chief accountant. We shall look at these ones. So let's now focus on the laws. We've done the laws of the function. We've done now the laws of the finance. Maybe to elaborate on the laws of finance manager as a person, because they are the same roles, but how you phrase them is the one that is going to make the difference. So here I'm talking about the finance manager as a person. So I want to look at the laws of finance manager as a person. So as I said, we are not going to elaborate everything. We give everything, but I'm going to give out some key points. I explain them, then you can be able to explain other points as we may come across them in our notes, because these things is just a matter of understanding who the person is, what that person is going to be doing. So, but what you have to understand, or what you have to keep in mind, is that the roles of a finance manager as a person are technically the roles of finance as a department or as a function. So one, we may look at things to do with raising of funds. So you have to explain the answers in an exam. So we don't want you to base on what we write on the notes, that you are supposed to cram that explanation. No. As long as the bottom line is getting the concept, you are bringing out the concept, irrespective of whatever words you are using, as long as they are explaining the concept, they are okay. So we don't want to rely on what the notes are saying. And we are not supposed to write exactly what the notes are or what they gave us in the books. Because the words that you find in those books are just there to help you understand the concept, but in the exam, so long as you say maybe a finance manager is responsible, we may say a finance manager is responsible for raising funds for the company through identifying different sources of finances that are cheaper to the company, then that's already 1 point. You are responsible to identify those sources of finance that are cheaper for the organization, and they will help the organization to increase more money in the future, period. That's very nice explanation. You don't even need to add anything there. So that's already 1 point. So it doesn't mean that you should read and cram whatever we say or whatever we write in different books and pamphlets and all these handouts that you may get. And I hope that makes sense to your end, because the examiner may just allocate like six marks, which means that you should be able to give at least 6 points, because we don't know whether they are giving each point 1 mark or 2, but you just give. If the person says you give 6, it is 6 mark question, give 6 as long as you know they are right. If they are not right, give 10 or 12, so that the examiner picks the 6. So the other one, we may look at distributing. We can now highlight distributing dividends. The finance manager has to make a decision whether he's going to give out to declare dividends, and whether they are going to give out that amount in cash or they are going to be using bonus shares. Simple English, and you are good to go. You don't need to write a lot. The other one is allocation of funds. Of course, after receiving the money, we don't expect you to just have the money and you keep it there. You have to make allocations. You may find that in our budget, we had so many issues to work on in a given financial year. You keep allocating that this one is going to go to this one is going, depending on which criteria or depending on the company policy. Because you may say this is very important, this is of a higher priority, so we give it the enough money that will help it to actually finish the project very fast. So you keep allocating that resources, not just being with the money. Even the other thing is even investing, because allocation is different. Investment of funds. Allocation, you are just making an allocation to make sure that this resources is actually enough to all the different key items you wanted to handle in a given financial year. But there is also going ahead and make the investment. Because the other allocation, you may allocate money on expenses. Those are not investments. So we need to be making investments to make more money for the shareholders. So those are the different roles that we could think of. Even working capital management, we haven't talked about it. It's responsible for managing receivables, managing payables, managing cash that we have. So working capital management. So the answers, they are the same, but how you phrase them. So let's now look at the roles of a finance controller. A finance controller we looked at the finance controller in our structure. But now, I spoke about a finance controller, and many times students don't understand who a finance controller is. And they can't differentiate a finance controller from a finance manager. Now, a finance controller is that person the person we used to call the chief accountant. In other words, he's a financial accountant. So you may find that this is the person who is actually heading the accounting department. If the organization is so big and they have so many transactions, you may find that the company has over, let's say, 10 accountants. They may be accounts assistant, but they are all working in the accounting department. They are the ones for those entries, and depending on the size of the organization, you may find that the organization has maybe one chief accountant, that is the person or the head of accounting department. But there are very many accounting officers that are within that, but this is their head, the chief accountant. But these are for big organizations. And you find that also this person has his roles specific, which are totally different from those of the finance manager. And those roles, we may talk about some of them. One of them is management of assets, because it's the one who is supposed to know that they are depreciating, how they are they supposed to be disposed of, those things. So it's going to be responsible for managing assets. And you'll find that in most cases, the finance controller is reporting to the finance manager. Because also the finance manager is going to be having, or is going to need to know some of the information from the financial controller. Because if this asset has been there for long, the finance manager needs to maybe to replace it, to make a replacement for that. Then they are supposed to get the information from the chief accountant. They will be knowing what the useful life and whatever. So they are the ones that are managing it, but you may find that most of the organization, you find they are reporting to the finance manager. So is also responsible for preparation of cash flow statements. Is also responsible for preparation of payroll, because the finance manager doesn't actually do those things. The finance manager doesn't handle payroll or cash flow statements, because he's the head of that department. And he has his accountant, whom we call the finance controller in this paper. So the organization that has all these people in place, it will depend on how big the business or the operations of that organization are. Because you can't be having few organizations and you recruit all these people just because you want to make the organization structure look fine. So it depends on the size of the entity and how its operations are. So how big the operation is for it to employ all these other people. Now, the other thing is also this chief accountant is going to be responsible for preparation of annual statutory accounts. And now these statutory accounts, these are those obligations like filing returns, preparation of financial statements. So it is the responsibility of the finance controller to make sure that returns are filed with the necessary regulators. Therefore, when the examiner asks this question, you should know there is a very big difference between the two people, the finance manager and the finance controller. But remember, we spoke of there were 3 people. We had even the treasurer. But now let's look at the treasury department as a whole before we look at the person. So, the treasury department, for example, just like you can see that the secretary to finance, most of the time the secretary to finance is actually the treasurer to the government of Uganda. Secretary to finance. But what we have to also keep in mind is that we are not referring to small organizations. So we are not referring to small organizations. Here we are referring to big companies. Because you may find that those small companies, they actually have their treasurer. But me, I'm not talking about there are those treasurers of the board that are on the treasurer on the board as per your business law, because there are those treasurers that are going to be on the board. No, we are not meaning those guys. We are meaning these guys who are normal employees that come on daily basis. Just like you see these banks, big Standard Chartered banks, they have their treasury department handling issues to do with the forex and all that. There are so many things they do there. Risk and the other stuffs they keep on doing. So this treasury department is mainly in banks and other big organizations with these big operations. They have big cash. They are doing different transactions. Maybe they are shipping goods they are shipping raw materials from Japan, from where they are getting, they have very many things to do with the currency and other stuff. So they may find that but this is mainly in banks. So when you go to those big banks, they can refer you to the treasury department, and it is headed by the treasurer. But you need to understand these 2 issues. There are words here that keep challenging the students, and students get confused. For example, there is a very big difference between the treasurer and a treasury. This one is a person, a normal human being. It is, in other words, it's an office, a position. But this one is a department, is a function, and it is headed by this very person. So I hope we can now get the difference. So when the examiner asks you for the roles of the treasury, then you should know that they are different to those roles of the treasurer as a person, because the roles of a department, they may be a little bit limited, but the roles of a person or the roles of a treasurer as a person or as a human being, you find that because a human being is going to be given more responsibilities, you may find that actually the work is not actually there in the treasury department. Maybe they can assign you something to think, like to think of. It may be in the docket of treasury, but it's something that you're supposed to think of. So you may find that as a person, they can allocate you more activities than what it should be for the department or for the function. However, when you're answering a question to do with treasurer or a treasury, we need to be careful, because you must first understand whether you are dealing with a local company or you are dealing with a multinational company. In other words, a multinational company is an international company. Maybe it has their head offices. Like we can talk of the international companies. We can talk of Stanbic, because Stanbic is under is it Standard Bank Group? Standard Group, I think, the one in South Africa. Then we also Standard Chartered. Things to do MTN, because it has its head office in South Africa. So there are other companies, multinational. In other words, they have different branches, different countries. Those are multinational companies. Then the local companies, these small companies of ours, within, they may not be small in size, but they are operating within one country. So as I said, when we are answering this question of the treasury or the treasurer, we need to be careful. We need to be careful when to see the company that is in the question. The examiner may not actually tell you that this is an international company or it is a local company, but they will just be giving you scenarios and you can be able to tell that that's an international company or it's a local company. So we need to understand what a local company is and what an international company is. So we looked at examples of each category. We gave examples of MTN for international companies, Coca-Cola. We have even Pepsi, is also an international company. Then for the local ones, local companies, we can have Uganda Breweries, can have New Vision, and others. Now, as I say, the gist of the matter is on whether the treasurer of a local government has the same roles as those of the treasurer of an international company. So what you need to know is that a treasurer of a local company has some roles that are limited, but the treasurer of an international company has, on top of these other roles, like the ones of the local company that we are going to give. So there are other additional roles as long as the treasurer is of an international company. So we want to look at now some of the roles of an international treasurer. One of them is managing foreign currency, foreign exchange, or foreign currency. So this is because if you are a treasurer of, let's say, MTN Group, you are a treasurer of MTN Group. So we see that MTN has many branches. It has like MTN Uganda. You find that it is spread over Africa. You have MTN Uganda, MTN Rwanda, MTN Nigeria, and others. So if you are a treasurer of that nature, then you need to manage foreign exchange fluctuations, because you'll be seeing that the currency in Uganda is different from that in Rwanda, is different from that in Nigeria, and how they are going to be changing, because remember that this MTN group is in South Africa, and these South Africans, they are reporting in rands. So we want to see if the treasurer is within the MTN group. We shall look at whether decentralized or centralized. If the treasurer in the MTN in South Africa, that's the group, wants to manage the fluctuations of these different countries, the one of Uganda, the one of, because you may find that these countries are experiencing inflation, and it causes maybe the rates to keep on fluctuating. So we need to be managing those currency fluctuations. Secondly, if you are that international treasurer, then you need to remit money, make money remittances. Now, this money, you are going to be making remittances either to the parent company in South Africa, that's MTN Group. The money can be, maybe you are MTN Uganda and you are transferring cash to MTN South Africa, that's the head office. Because we said MTN is spread over Africa. So it will be MTN Group that wants to maybe to send money to its other branches. They are sending money to Uganda, they are sending money to Rwanda, they are sending money to Kenya, they are sending money to Nigeria. So you find that you need to make remittances. So you need to manage what we call transfer pricing. So you need to be careful with the examiner when he begins separating the two treasurers. And you can see in our notes, I covered those of the treasurer of the local company and the treasurers of the national company. So you don't need to worry. Those functions, they are there. So now we want to look at, we want to make some detailed classification of those treasury departments. I want to give their roles. We start maybe with the treasury department, then we end up with the roles of the treasurers as a human being. Because we need to be talking more about the treasury, because the most important thing is for you to understand the international treasury function, because for it has some other additional laws or additional functions other than those of the local treasury. So our emphasis is going to basically look at the international treasury. We are just going to focus on the international treasury. So let's try to look at now the laws. The other one we gave just brief, but we want to look at the laws of an international treasury. This is the department, treasury function. This is not the person, this is now the department. So one of them we have setting. They are the same answers, but the way you phrase them. Setting transfer prices. How much are you going to be transferring the cash? Because setting transfer prices to reduce the overall tax bill. Now, normally, if you're like MTN Group, there is money that you are supposed to remit maybe back to your branches, or it is these branches that are supposed to remit money to the parent company. So the MTN Group, the head office are in South Africa. Now, if MTN Uganda wants to remit some money to the parent company in South Africa, through that process, and depending on the tax regime, such a company, in other words, if the tax regime here, because it is Uganda that wants to transfer the money, so we depend on the tax regime that is within the country of operation, that's Uganda. So the more you transfer to the parent company, the lesser taxes you pay in your country. So that's why you find the government keeps on fighting those international remittances, that companies that are transferring everything that they have worked from the same country, and they are transferring it, the money there to their headquarters, called profit repatriation. So the more they keep on transferring, the lesser taxes they are going to be paying here. So depending on the tax regime that is there. So that's why you find the government keeps on restricting it, whereby the government tries to limit, it tries to set limits on how much a company can transfer back to its parent company. Otherwise, a company can transfer everything the other side to the parent company, and it doesn't pay tax in where it is operating. Therefore, that's why we are saying here that the international treasury is responsible for setting transfer prices to reduce the overall tax bill. So the second point is deciding on the currency exposure policies and procedures. So sometimes back we used to have a dollar, we used to hear a dollar keeps on changing, like the shilling it keeps on changing. You find that maybe the inflation is too high. So you find that the international treasurer, you need to decide on how you can manage those foreign currency fluctuations. Because if you don't lock some of those currencies, because you may find that the Ugandan shilling keeps on changing, the Kenyan shilling is keeping on changing. So the issue here is that if the international treasurer doesn't lock some of those currencies to avoid losses, because when these currencies are changing, you find that the company is making some losses. They may increase or decrease. But that's why you find that they are trying to lock those fluctuations. So you find that the currency exchange rates, they are locked. Maybe they say for us we are only transacting in dollars. It means they have removed the risk of fluctuation in terms of losing the money through foreign exchange losses. Because if you don't do that, then you will lose money in transferring or buying materials from other countries. Because there is no way you are going to risk it. Someone may say, well, for us, we want to buy raw material, oh, you're buying our raw materials from China. But you find the currency is not stable. So what they do, they may fix and they say, for us, we are only going to be transacting in dollars. That's one way of locking your currency so that you don't make losses. Because some of them, they get, because you find that other companies, they get raw materials, others they get components. They get them from different countries. So they keep on exchanging. And that's why the treasurer must be able to manage the currency exposures and therefore to be able to reduce the risk or the foreign exchange losses. So you learn some of these things under risk management in your financial reporting and even a advanced financial reporting. But the point here is to actually just understand, you squeeze your brain a little bit so that you can be able to pick a point out of it. The other role of an international treasury is that it's a tool for transferring, it is a tool for transferring cash across international borders. Remember, we are talking about the department, not an individual. So, for example, as we said, MTN Uganda, you may find that, let's give an example. You may find that MTN Uganda has no cash. And maybe MTN Kenya has some cash, which is extra. In other words, they have more than what they can use. So what they can do, they can send the money or they can send the cash to MTN Uganda and they bail them out to solve whichever problem that may happen. And that can be a mode of transferring cash. But that is going to be done by the international treasurer. So there are other points that we may not talk about here. But one that I need to highlight is the netting and matching. Netting and matching of currency obligations. Now, here on level 2, the point ends at understanding these two concepts theoretically. We don't need to do any computation because that's what the exam syllabus is guiding us for this paper. So, what do we mean by netting and matching currency obligations? The quickest way that we can be able to understand this is by maybe we use some example. We do some illustration. That's when we can be able to understand this. Now, we can say let's use MTN because the one we've been using. We have MTN Group that is based in South Africa. And these guys, they have branches in Uganda, Rwanda, Nigeria, etc. There are other branches. Now, suppose MTN Nigeria supplied some parts to MTN Uganda. Maybe they supply these components, or they may be raw materials, they may be maybe equipments, anything. It can be even money. Now, so if MTN Nigeria supplied MTN Uganda with some parts, let's say raw materials, there may be equipments. Now, it means MTN Nigeria is going to be expecting some money from MTN Uganda. They are expecting cash. This one is supposed to be paying, MTN Uganda is supposed to be paying MTN Nigeria for the supply of the raw materials they gave to them. Now, at the same time, you find that MTN Nigeria was supposed to remit cash to its head office. They had maybe, let's say they had a loan. Let's just use a loan. They had a loan to, they're supposed to pay money. They pick some money from their head office. Maybe for operation, maybe working capital, something like that. Any amount. It may be that MTN, let's not use a loan. Let's just say they were supposed to submit in money. Just they were supposed to be a remittance. Because even if it is a loan, they will be paying back. But let's use a remittance. MTN Nigeria, since it is a branch, it's supposed to submit money to MTN Group. It may be end of year amount, depending on how much they set for them. That is supposed to be remitted to the head office. So what happens is that, what will happen is that the treasurer, who is probably seated at the headquarters here in South Africa, what that person is going to be doing, what the treasurer is going to say, is going to tell MTN Uganda that rather than you submitting money to MTN Nigeria and then MTN Nigeria submits the money to us, it's going to cause some foreign exchange loss, because money is moving from Uganda to Nigeria and then from Nigeria to South Africa. So there are so many currencies that are going to be involved. So what they will do, they will tell MTN Uganda that rather than sending money to Nigeria, then they would just tell MTN Uganda to just remit the money to MTN South Africa. Because if Nigeria submitted raw materials of, let's say, $50, and this MTN, Nigeria is supposed to remit, let's say, $20,000, and this one Uganda is supposed to pay Nigeria $50,000. So what will happen? The treasurer, who is at the headquarters in South Africa, will just tell MTN Uganda that you pay what we owe, what is supposed to be remitted by Nigeria, the 20,000 US dollars. MTN Uganda will pay the 20,000 to MTN Group. And it means it will only be that MTN Uganda will remit to Nigeria only 30,000 US dollars. And this money will not be sent to the group. It will be retained by MTN Nigeria. Because if they had sent 50, MTN Nigeria would remove the 20,000 US dollars and sends it to South Africa, of which it will cause a loss. Because in between these two transactions, there must be a loss in value in terms of currency losses, foreign exchange losses. So that's what happens. It's you net off the obligation of the other, and this one submits less. So those are the issues to do with netting and matching currency obligations. But when you move to advanced financial management, we shall do some computations. We'll go in details and we see how we can do those ideas practically. So that's how the examiner examines the matching and netting of currency obligations, the other side of advanced financial management. So now that we have highlighted the roles of an international treasury, let's now look at the roles of a local treasury, because these are going to be uniform to all. So let's put these in context. So these are the general roles for all the treasury, but the other one, they are in excess. So these are the roles of a local treasurer. They are also the same. So when the examiner asks for the roles and doesn't specify, you can give these ones and you add on the other ones. So one, we have hedging of foreign exchange risk. Also hedging, we shall study it in advanced financial management. But here we just need to know how it is. So if you are dealing with foreign currency, the Treasury Department should have to come up with a mechanism of dealing with with forex losses, in other words, foreign exchange losses. This is just a mechanism of how to sort losses. And those mechanisms, they are the ones that we call hedging. So we shall see these practically because we have some computations on advanced financial management. The other one that the local treasurer does, short-term cash management. Because these guys are going to be doing the lending and borrowing as it will be required. Because we are not supposed, the Treasury Department is not supposed to keep cash. Cash is supposed to be lent out to make more money. The other issue is interest risk management. Of course, this is most of the things that they do. They handle risks, and that's what they do most of the times. The other one is also raising long-term finance. Of course, these ones, they work hand in hand with the finance manager. They are the ones advising the finance manager on which sources to go for. So those are the roles that we can talk about. But under Treasury Department, there is a scenario that we need to take note of. The examiner brings it and it can give it like 5 marks, and it's all about the Treasury Department. How can we learn a Treasury Department as either a profit or a cost center? So under the Treasury Department, there is a concern whether the Treasury Department should be run as a cost center or a profit center. So we need to understand that any department that is run as a cost center is always a problem to an organization. In other words, for you, if you only expense and you don't make money, like maybe the customer service receptionist, you find that the reception doesn't actually make money, but they are only incurring costs because they are paying the people who are actually attending to the people, but they don't make profit. So receptionists in every organization, they don't make money for the company. So such a department is only incurring costs to the organization. So we have only costs. And that's what it means by running any department as a cost center. Whereas a profit center, it means you are incurring costs, but at the same time you are making money. Thus, if you try to maybe to take away or to get the difference, you'll be trying to see how that department is performing, whether it is making a loss or it is making a profit. So the examiner will try to find out from you how can the treasury department make money, or how can it be run as a profit center. So that's what the examiner will be interested in. How can a treasury department be run as a profit center? In other words, how can the treasury department make money? So the examiner will be trying to find out whether you know or you can tell how can a treasury department be run as a profit center, or how can a treasury department make money. And one of the points that we can look up, or that we can think of, is we are saying that the treasury department should charge each division or department the market value of the services provided by the treasury department. For example, if let's say you are Stanbic Bank and you are in the treasury department or division, then you may find that there is a department, maybe the sales department or the production department, whichever department that wants maybe to transfer money, or they want to do something, and it involves exchange of money. So what we are saying is that the treasury department must do that on behalf of that other department at a normal cost. And they shouldn't say that since we are brothers in the same bank or in the same company, then we should do it for free of charge. So if the treasury department is to make money, these other components or departments must be serviced at a cost, more so at the market value. So that's one way they can be able to make money. The other way is through hedging. And we said hedging, they are responsible for managing any foreign exchange exposure. So the process of controlling the changes or the currency fluctuations, because it is within the Treasury Department where they prepare for eventualities. And by doing this, they should be able to reach at a point where they can make money, especially after handling the exchange losses. Because when they are doing hedging, we are finding mechanism of sorting foreign exchange losses. So in that process of hedging, you must be able to find ways how you can be negotiating to see that you can be able to make money in every situation. Maybe you are transacting with other customers, you should be negotiating, maybe it is a dollar rate and you're trying to negotiate with a customer. It will be a win-win situation whereby you are also being able to make some money. So those are some of the ways how a Treasury Department can actually make money. We are now going to conclude with the centralization and decentralization of the Treasury Department. It's a departmental function. Now, the other question under this Treasury Department or Treasury function, we have these two concepts, and these are examinable areas. So the examiner may ask you, in other words, the Treasury Department can be decentralized, meaning that every branch there is a Treasury Department, or it can be centralized, whereby it is only the head office or the headquarters that has the Treasury Department. So now, one advantage of decentralizing the Treasury function is if you put a Treasury Department at every branch, then it means that every branch will have a treasurer or a person responsible for treasury. And that will increase costs, because we are paying so many people, the role has been duplicated. Just like the way you are seeing maybe for MTN Group. MTN Group is spread over Africa. They can decide that let's decentralize our Treasury Department or our Treasury component, whereby every country or every branch has its own treasurer. And they can also decide that they should centralize the Treasury function, whereby they only recruit one or two treasurers, and they are sitting at the headquarters in South Africa. And they are the ones that manage everything, because they can manage. Since the technology is there, it is a technology-based environment, things can be handled. Therefore, what will the examiner do? The examiner is going to ask for the advantages and the disadvantages of either decentralization or centralization of the Treasury Department. In other words, if the Treasury Department is decentralized, then what will be the advantages of such? So you have a group of company, that has very many branches. So if you are to do decentralization, it means every branch is going to be having its own treasury department with a treasurer, or a person responsible for that department. That's what we mean by decentralization. Now, we need to look at the advantages of, let's say, decentralization. You can look at the advantages of centralizing the treasury department. One, we are saying that there is no need of having treasury skills duplicated. No need to have treasury skills duplicated. Meaning, we shall not need very many treasury officers or the treasurers. So, we shall not have any duplication of the treasury department or the treasury skills throughout the group of companies. This is because the company can only recruit 2 or 3 people, and they can run the treasury department, and they are centered at the head office or the headquarters. If it is MTN, they are in South Africa. 2, foreign exchange risks. Foreign exchange risk management is likely to be improved in the group of companies. In other words, it's centralized, and therefore they will be able to negotiate the treasury components, because the being centralized, they will be able to know and track all the information in regards to the currency exposures. But if it is decentralized, then every country will be on its own. The other idea is that, or the other point is that the bank charges could be lower, could be low. In other words, there will be no need for keeping very many accounts for events, because everything is centralized at the top. The last one we can look at, it's even borrowing. Any borrowing can be arranged in bulk. Because here, since we have only one treasury department, it means you can be able to borrow more cash, because they are going to be looking at the transactions, all the cash flows that are combined together. If, let's say, it is MTN Group, they have combined all its branches in different countries, and they are combining all the cash flows at one point. So when you are looking at the cash flows, if at all you want to borrow them or to lend them money, you will find that the company can be lent so much, and when they get that money, they can actually come and distribute to those different branches that may need cash. However, the examiner may ask you for the advantages of decentralization. Let's also look at the advantages of decentralization. Now, for decentralization, I'm going to explain very few points here. Then you'll be able to add, to explain. I'm just going to highlight them. One, there is greater autonomy. In other words, you find that every branch can actually do things on its own. There are things they can do and they don't need to make very many consultations on certain issues. So there is greater autonomy to every branch or division, the different divisions. Two, in case of urgency or in case of an emergency, there is an emergency need for cash, because you can just get the cash when you need, than going through the formal procedures of picking cash from or waiting for the headquarters to actually remit the cash. Then the other one, sources of finance can be diversified and can match local assets. Because now when you have the cash, you can actually know what is trending in the company and you can be able to buy depending on the local needs or the local demands that are there. Then there is also quick decision making. So that's where we are going to stop for today. That's the end of our lecture number 1. So we shall look at lecture number 2 some other time. So thank you for watching. Endeavor to subscribe, hit the notification bell icon so that you can be notified whenever we upload new videos. Thank you for watching. Bye.